Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We have an unbelievable panel this morning. To my right of me, I'm Harvey Frieden. To the right of me, Harry Glanz.
Good morning, everybody. We got a full house in here. It's going to be a great segment. And guess what? We're going to have a lot of conversation. We got deep early this morning pregame. All right, we'll talk about all that, but we're happy to have everybody. Welcome, everybody.
We're joined by, of course, Becky Yaley, top 1% of all originators in the United States. Becky's got a lot to talk about, too, this morning. We've been seeing each other in pictures at closings and stuff, so it's been a lot of fun. It's been a really busy summer. We're going to give you 1 hour of mortgage real estate. We've got special guests in today. Carolyn Feldman with the what do we call it?
Nationwide Credit Clearing.
All right, Nationwide Credit Clearing, and they're one of the top credit companies to fix your credit score. We're going to talk all about that this morning. And
Harvey, before we go to Holly, is Carolyn going to tell us that we're going to fix your credit, but you have to pay your bills?
You got to pay your bills. That's going to be part of it.
You can't just wipe things off and say, I've never paid my bills. We're going to fix your credit, and you don't have to pay your bills.
And you're not going to get a house if that's the story. We're going to tell you.
Carolyn's going to clear that up, right?
Well, Holly Amato joins us too from eXp Realty. Holly, welcome to our show.
Well, thank you. Good morning.
And of course, Holly, I know that you do podcasting out there, so you've got a lot to talk about. One of your podcasts specializes in housing and buying and selling when you're going through a divorce. So that's always an interesting topic out there. We'll get into that this morning. 248-539-9797. We take all your calls.
Hey, everybody. So me and Harvey got to share a mic because we got a full house. So, and I'm happy to be here. I feel like I haven't been here in like a couple of weeks just because the holiday, like one Saturday off makes you feel like it's been 1,000 years. But I appreciate the both of you being in here because you're coming from two separate, things, but everything goes hand in hand, right? Credit is always a huge issue when someone is trying to get properly pre-approved, and we know that. And then obviously we know life happens. Sometimes people are moving, and what their reasons and what their pain points are, sometimes, unfortunately, divorce is a part of that. Whether it's a refinance or you're trying to sell and people are like, oh my gosh, I can't believe I have to sell and I have this great interest rate. Well, life happens. And sometimes you have to be able to set the people up for success. Because my biggest thing is, I'm going to go where you grow, whatever that is, whatever stage in life you are in, I'm going to be there right there, shoulder to shoulder with you. So I appreciate both of you being in here with all of your expertise.
You guys going to jump in any minute now. You can just go for it if you want.
Thank you for inviting us on your show.
Yes,
well, great.
Thank you.
Well, Karen, we'll do the credit thing first, Holly, and then, of course, we'll dive into all this, and it'll all mesh together today. Carolyn, I spoke with your Todd, your boss out there in Chicago yesterday, and he gave us some insight. You gave us some insight to your company. We get these mailers, we get the emails every day, and they're like, call me, I'm going to help everyone fix their credit. And then there's this big price tag with it. And I said, why does somebody need to pay a third party? But in some cases, people need the expertise, and that's what you guys do.
Correct. We've been open since 1991, so we have a lot of experience. And there's a lot of companies out there, but they don't even charge legally, which is charging a flat rate. They're supposed to be charging monthly. Not, it's like a doctor charging you for a year, but it took them 3 months to cure you. So, you have to charge according to as long as you're providing the service. We do a evaluation for everybody who calls. We were invited to look through the back door at a bureau in order to look at somebody's credit without anyone seeing us. We can see everyone else, but they can't see us. So it's a soft pull. So I can evaluate somebody's situation before I even take their case.
Yeah, I love that. And here's the thing. There's legitimate vendors and there's people that just want to take your money. And if you've listened to the show over the last 23 years and 34 years that we've been doing mortgages, you just can't give somebody or write somebody a check or give them your credit card and expect your credit to go right from 520 to 720. Doesn't work that way. Carolyn, it takes time for people to rebuild their credit, doesn't it?
Well, it just depends on, there's different ways that they can rebuild their credit. But if somebody has really bad credit, they definitely need to do the repair. Because as I tell people, these are like report cards, and all those Fs have accumulated over the years, and they stay on there for 7 years. Mm-hmm. So when someone's coming to me, they're saying, remove those Fs so I can get into college.
Right.
Yeah. I think credit is always a big thing, because we look at it. We also analyze it, and we try to help people repair that credit. And, credit is something that is never really taught, like how to get it, how to keep it. And it's hard to get. It's sometimes a good credit score is hard to keep, but it's even harder to get it back once you lose it.
Correct.
And identifying those ways of getting where you need to go for a proper pre-approval, because a lot of times people have that hesitation. Oh, I don't want you to look at my credit. It's going to ding my credit. And you spend a lot of time saying, look, the credit inquiry is less than 1% of an effect on your credit score. What is affecting it is ultimately missed payments, overextending the credit.
Except for we have a privilege. They're letting us look through their software. So there's no inquiry.
Yeah, so that's when she said it's a soft pull. So in terminology, a soft pull
We're not
means
pulling-
it doesn't hit it, and it doesn't hit it hard, and there's no inquiry.
And the other nice thing, I tell people these are like report cards. In high school we only had one, but now we have 3: TransUnion.
I don't think I
Stern,
ever
and
had a
Equifax.
report card.
Oh, you
Parents
do?
don't think you
Yeah.
have one here.
Yeah, my parents never saw a report card.
Well, Harry, I tell everyone I was so smart the dean was on my list.
There you go. I like that.
Yeah. Anyway, these, in order for people to get approved for a mortgage, they have to have 3 decent scores because they take the middle score, as you know. So when people, want to get into a good college, obviously you've got to be aware of what you're doing in 12th grade, which are your active lines of credit. So you can't make late payments just before you're trying to get a mortgage. It makes no sense. But they're asking us to clean up the history of it in order to get approved for those mortgages.
Would you like to give us some helpful tips? Again, the first thing they should do is obviously we'll get in touch with you, and then you could do the soft pull, and then you could put a program together. So we see different types of bad credit. We see lots of collection accounts where they just walked away from paying bills, civil judgments, but then you got the late payments on the cars, credit cards, things like that, and then the overutilization. Tough word for me to say.
Right. I go over everything with the person, and I think that's one of the reasons why people enjoy working with me, and the brokers do, or the mortgage companies do as well, is I go over everything with them before I start their case so they know what to expect. And, so I go over their utilization ratio, what's actually recording the day that they call me. So they know everything before I get started.
I have a question for you, actually. So I have a client right now. He wanted to do a cash out refinance, and he is with some kind of credit repair company, not you guys. And, and had I got in contact with him before, he reached out to me, it would have been a different situation. But he's, in this contract or whatever's happening, he needs to save money. He's trying to do this cash out refinance, but I can't help him because his overall debt ratios are too high, and I can't pay off these debts because somehow they're entangled into whatever agreement he has. So typically in these situations, let's just say...
Do you mean credit repair or debt consolidation?
No, it's a credit repair.
Okay.
I definitely saw the contract for it. It is some kind of credit repair. They're trying to remove some things, but they won't let him pay it off in advance, through my cash out refinance because whatever he's entangled. So I wanted to know, is that something, is it a case by case basis? Because I can see that you're like, that sounds weird. I can see it on your face.
Well, no, I mean, I'll go over with people what you need to do in order to boost the scores as quickly as possible. And I'll also get them ready 30 days before they actually apply for the loan. I mean, I give advice. But the other nice thing is, too, we let people watch their credit repair on our website. So they actually get to see what we're doing on their behalf. And we dispute everything from day one. But as far as what you're talking about with, you said he's trying to pay it off and they're telling him not to?
Well, he's over this, right? And he needs to be able to save money, immediately. But because he's already in this, contract, they won't allow him to pay it off, or it's already been disputed and removed, but they won't give him the documentation so I can see that it's a zero balance.
Yeah,
So I'll probably have him reach out to you as well so we can maybe see how we can fix this, because he's in a bad spot, and I think he's in contract with someone that isn't really doing their proper due diligence. From, like you said, you're paying someone a year, and they're cured you in 3 months kind of thing. I think it's one of those situations.
So, Carolyn, if he's paid a fee to these people and he's paying them money, don't they have an obligation to release documentation because he's paid for it?
Well, I don't know who this company is, so I can't really jump to conclusions
Yeah.
about their legality or anything. But you would think
Yeah, in general,
that
if
they're
you
trying
provide
to
a
do what's in the
service,
client's best interest.
like in our industry, if we provide a service, if somebody pays us for an appraisal, we have to release the appraisal to them. If they pay us for a service, then we have to go ahead and release the information to them. So I would imagine, Beck, that these people are withholding it. And I can make that judgment only for the simple reason is that they've paid for it. There's been consideration given for a service provided, and they're entitled to receive whatever they've paid for.
Yeah,
so
Becky,
I would
is this
I
a
would roll
local
with that.
company?
Yeah, no. I don't know. I can't.
Well, Carolyn, don't worry. We're going to get you in touch with that person for sure. All right. Before we even bring Holly in, because we're going to be going to a break in a minute here, this outlook for the U.S. housing market, Holly, we'll come back after the break and talk all about it. The second half of the year is already here. 2 words, definitely, inventory and interest rates. So when we come back, we'll talk all about it. Holly will tell us the buyers and the sellers and what you need to do to win that offer. Right when we come back, 248-539-9797. Keep it here. Welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can catch us at Capital all week long. 1-800-LOW-RATE, the best mortgage banker. When experience counts, call Capital Mortgage Funding. That's 1-800-LOW-RATE, 1-800-569-7283. In today's market, Holly, boy, experience counts, so you better know what you're doing, because winning these offers has really been a situation out there over the last couple of years as all these buyers came out of the woodwork. The pandemic brought on the lowest interest rates we've ever seen, ever seen. And home ownership just became something that everyone wanted a piece of. Holly, that hasn't changed at all. But what has changed here? We heading into the second part of 2023, getting these offers accepted. What are you seeing out there? And is there going to be more inventory hitting the marketplace?
Well, if I knew the answer to that, we could really market me well, couldn't we? If I had that crystal ball, we want the crystal ball.
Give us something.
I always tell people, I don't have a crystal ball. I wish I did. So you really hit the nail on the head. After COVID, we had the low rates. Everyone can afford a home. They're coming out of the woodwork. And as soon as the rates started to shoot up, we started to see buyers pull back a little bit because everyone freaked for a minute. They were like, what's going on? You know, we knew the rate had to go up. It's normal to go up, but unfortunately it went up pretty quick. So you've got people who are sitting back, kind of like Chicken Little, is the sky falling? Should I do anything? I saw there was a lot of people that froze for a moment, and real estate keeps going. It's cyclical. However, I think a lot of people thought that rate wouldn't keep going up, and yet it did. So we saw, I would say, late fall, early into this year, it was slower. But then I feel like people realized this isn't changing. This rate is just going to continue going up. So we still have that frenzy. We're still seeing multiple offers in certain price points, especially. We're seeing a 2021 all over again, except We don't have that 3%. So it's a bloodbath in some situations. It's tough. And buyers are frustrated because the rate keeps going up. Some of them are wishing they didn't wait because they thought we told them, don't wait, don't wait, get out there. And now it's like we're dealing with a situation of, you're in a multiple offer situation. You got to go over. And now the rate is higher.
You know what else has gone up, Holly, besides rates? Appreciation, home prices, the values have gone up, everything's gone up.
Yeah.
So if people waited, then all they did was cost themselves some money in terms of what they're going to pay, correct?
Exactly.
I mean, house prices aren't going down.
No.
And inventory isn't going up. So therefore, supply and demand, prices are going to continue to go up. And if they keep waiting, now we suggested if it's got to check 8 or 9 or 10 of the boxes. If you have 10 boxes, you got to go 80%. If it's anything lower than that, then maybe you shouldn't buy the house. Bottom line is more houses are not right this second coming on the market. Prices are going to continue to go up. So you're costing yourself some money if you don't jump in.
The thing
Exactly.
is that people are procrastinators. It's the same people that didn't jump on the bandwagon in 2020 and 21 when the rates were right in that moment that are still kind of like, oh man, I missed the boat again. No, you didn't. It works when it's best for you. And
Yes.
People want to stand in line just because they see someone else standing in line sometimes. And there's a lot of people that bought in 2020 that regret it because they are going to brag about that 3% interest rate, but they're not bragging about that $60,000 over asking that they threw at that property just to win the offer.
Exactly. And I always tell people, you have to live your life. When is a good time to buy? When you need to buy. When is a good time to sell? When you need to sell. Should we stop our lives because the rate went up? Should we stop our lives if pricing does come down at some point? The most important thing I tell people is to put your team together. Have a real estate agent that knows their stuff, that can tell you what you need to know. Like if someone says to me, am I going to get my money out of this house? My first question is, how long are you going to be there? Because if you tell me you need to move in 2 years, we really need to talk because you've got your sell costs. Okay, let's talk about that. If you're realistic and you're telling me you're going to be there 5 years or more, yes, let's look at what the climate says and where we're going with it. But again, don't have the crystal ball. But it's when you need to buy, you should buy. You shouldn't stay just because you're looking at numbers. And it's exactly what you just said. They went way over. Mm-hmm. So when the market flips and we've got a lower rate maybe, and maybe we have a ton of inventory and you can get a quote better deal, again, it's a numbers thing. And when you have good mortgage people like you guys who are able to help really structure that with your different programs like the buy downs, which I'm sure you can talk about, you can set people up properly.
But you're smart. You're asking all the right questions up front. First thing we ask, how long are you going to be in the house? Somebody says, what's my best mortgage program? Well, how long are you going to be there? If you're going to be there 2 years, I mean, it's just not right. If you're going to buy a house and somebody says to you, I'm only going to be there 2 years, am I going to get my money out? I'm going to give you the answer is, probably not.
Well, it's like it's like the people that bought the houses that where I want land and I want all this stuff because they thought we're going remote till the end of time, and now they're getting called back to work, and now that home that they bought in 20 and 21 maybe doesn't suit their needs because now they have to go back to the office. Now they need to be back in the city. So a lot of people were making these they
were making rash decisions. It was cool to have people in your backyard for a while, but now we're not having so many people in the backyard anymore.
But also, I understand a lot of people weren't happy because they bypassed the home inspection just to.
Yeah, there's a lot of buyer's
God,
remorse
I love
that was
Carolyn.
happening. Yeah, I
love you so much right now.
Yeah, but because people were just, I want to win. And what did you win at the end of the day? Once
you want a lot of problems.
Yeah.
If
It's
you
not a
waive
good
that home
plan.
inspection, never a good plan, right?
So
Holly,
here's
to
what
waive
I
that
told
inspection?
people. I've never had someone waive an inspection. If they really wanted
love her
to, I have
too.
a form that they would have to sign that basically says, I understand I shouldn't be doing this. However, what we did to combat that was we called it informational only. We would do a quick inspection and we understood that it was just, do we still want to move forward or are we going to cancel the contract? Because it's never a good financial decision not to inspect a home. This is a big purchase.
Right. So everybody out there
purchase.
right now in a tight market, and we'll talk about the tight markets out there right now, you can do a pass-fail inspection. Don't waive the right for your inspection. Go ahead and do it, and you're doing it for non-negotiable purposes. All right. You're not going to try to negotiate the purchase price. All you're saying is, Becky, do I want to move forward with the transaction? If it passes, I am. If it fails, I'm out.
Yeah,
but there's no
exactly.
negotiation. That's
I mean, the reality is, though, is that when you are waiving these inspections, mold, if let's just say mold's in there, because the reason why I bring up is I actually have a couple of them where They waived the private home inspection for whatever the reason is, but it was visibly, you could see it with your eyes, and therefore it was caught on the appraisal because the appraiser has a fiduciary duty to also protect the investor, the client. And if you can visibly see mold with your naked eye, whether it is FHA, conventional, it is going to be caught and it's going to have to be addressed because that's a health and safety concern. So that again now is something that you could have saved yourself because now you're in this mortgage and now you don't even know if you want to move forward with this property. So it's important to, like you said, have that team in place because there are safety procedures. There's things that we have to do to protect you because you are our biggest, you are our biggest importance.
And let's face it, Harvey, Mike Tomchek, Paramount Appraisals, he has to put it on there because he has to protect himself.
Oh, yeah.
Right? So
They
appraisers
wanna.
have to protect themselves too because if they see something and don't report it and it comes back, everybody's going to be enjoined in that lawsuit.
Oh, yeah,
Trust
they
me.
CYO,
Right, Mike, text me if you
Yeah,
hear me.
yeah.
You know I'm protecting you, brother.
Everyone wants to cover their own. Definitely, one of the things, Holly, the lack of inventory out there, and what will happen when interest rates do drop. Let's just say they do, and we don't see that anytime soon. In fact, now the Fed's talking. We'll get into some articles later talking about this next Fed meeting. Is it next week? I believe.
It is.
Yeah, they're already talking about maybe another raise in the Fed fund rate. Again, doesn't have a direct correlation to mortgage interest rates, but it does.
Sure.
And we've already seen the effects. It's pretty much it's 7% or above. Again, we'll have to get into discount points, all the different loan programs out there. But when those rates do drop, Holly, to 5.5, it's going to really increase the demand for housing. And now we're back to the drawing board again.
See, here's the thing. History repeats itself. And if we're smart, we pay attention to history and we don't make the same mistakes. So this is what I try to show people. Believe us now or believe us later. It's better to believe us now. We're not trying to just get you to buy now because we want to make money. Like you mentioned, we want to take care of people. That's how we're going to have longevity in this business. People know that we care. However, as soon as the rates drop and you've got those people who did wait, it's going to be another situation where we've got serious multiple offers. I had people who were borrowing cash from family. Some people were cashing out 401ks and then, of course, having to put it back in or IRAs. So they're going and just grabbing cash to get a house. And I have to stop and ask myself, is that the best financial decision? Right? So Harvey, honestly, I ask people, talk to you. Find out what is the difference in that 1 or 2% when you're looking at it on that amortization scale, and then look at how much you have to go over potentially. Let's just look at 2021. In whatever market you're in, it might be 20,000, it might be 50,000. But how long does it take for you to make that money back on that scale? Are you really winning? Is it really a good decision?
We're diving all into this money thing, money. But Harry knows, and we all know, Carolyn, you know, and Becky and I know it's about lifestyle too. These are a choice you're going to make. If you're living in a low rental situation now, either the landlord hasn't touched the property in forever and it's pretty nasty, and things are going to start breaking down on you when your furnace goes this winter, or they're fixing up the place and their rent's going through the roof. And we know that if you're renting, your interest rate's 100%.
Yes.
So the opportunity is never going to go away for home ownership. It just, like you said, it's individualized. So sit down with this professional team. We keep urging it. I tell people to stop clicking buttons because, well, boy, oh boy, the families I speak to now are the ones that click buttons and they're not even sure about what they did in the last couple of years. It's a little scary out there. We're seeing quite a few people clicking buttons. Now, real estate agents are showing $300,000 homes to people. And I asked the question to the one guy, I said, well, how much money have you saved up? And the answer is zero. And you're out there looking at homes at $300,000. Now you're getting your hopes up.
Do you think Holly would show a house to somebody that didn't have any money? I mean, she asked all the right questions.
Maybe the
up
first
front.
one.
I like you. I
Holly,
knew
maybe
I
the
liked
first
you
one.
when I met you.
It's never going to happen. Okay, she's not going to do it. Qualified people, they don't do those things. They just don't. They ask the questions. When you go to a doctor, you walk in the doctor's office, they're just not dispensing medication. You sit down, they ask you all the questions. What's going on? How long has this been going on? How do you feel? They take your vitals. It's the same thing in every industry. Holly's asking the questions.
Well, I
It's
always say I'm
amazing
not a
to me.
firefighter for sure. I don't run, straight to show a house. That's not my job. My job is to do exactly what you said. Get the questions answered. Why am I going to show you a house that you can't afford and you haven't set yourself up properly? It's a waste of everyone's time, and then you're disappointed.
We call it the hungry eye syndrome,
Right.
And the truth is that the higher rates actually have been everyone's friend because it's allowed for people to actually get in there and get some offers accepted in the interim of all this without all that competition. But like you mentioned earlier, this market isn't just one thing, though. This market is over over asking. This market is at asking. I have concessions. I have under asking because there's so many things that are happening depending on pockets. And you have to know, we have to be micro focused on that specific pocket that you are looking in. And when you have agents like yourself that are hyper focused on the individual needs because you've identified the programs, you've identified what boxes we're going to check for those people, and now you know what you're looking for in that particular market. So you know how to, shake the hands, kiss the babies, and know what the pain points are of the sellers to win those offers.
All right, when these rates come down to 5 or 5.5, if they ever do come down, what will it do? Will it unleash some of the inventory? Maybe those folks out there, Harry, maybe older than you folks, those baby boomers,
Thank
they'll
you for
say
that.
it's time to sell the house
Appreciate that.
and buy another one and release some inventory. We don't have all the answers,
Carolyn,
but
why
when
are
we
you
come
laughing?
back, 248-539-9797, all of your questions. Alrighty, welcome back to the show. It is live, the Hardcore Mortgage Real Estate Business Show in our 23rd plus year, coming up to our 24th year, giving you all sorts of mortgage real estate information. Today, of course, we brought on Holly Amato, eXp Realty, and Carolyn Feldman with Nationwide Credit Counseling. I got it right, credit counseling. So give us a call, 248-539-9797. I need a lot of it. We'll take your calls, though, especially if you have a credit situation or you're thinking about buying or selling a house. We got lots of expertise in here, of course. Becky Alley, Harvey Freed, myself. Harry Glantz to my right here. We can answer just about anything on mortgages and what's going on with the inventory situation out there. So we're going to get into a little bit of that. We talk about inspections. Let's just dive back into the credit just a little bit more. Sure. Again, we're getting these calls. Families want to get conventional mortgages because it just looks better to have a conventional approval, even though us experts know that an FHA approval is just as easy. And most of the times those transactions go a lot smoother. Families want to get into a conventional mortgage. I got to get their credit score up over 700. That's the key for us, Carolyn, in the business. Truly over 700. We got some 680 and above conventional buyers, but 700. How do we get these credit scores up? What are the couple of tips that would get our credit scores up right away?
Okay, the quickest way, well, obviously, we've discussed it before, but make your payments on time. And the fastest way, though, is actually sometimes through the credit card history. So if you pay down your credit cards to get that ratio below 30%, that's the quickest way. Another way is to increase your credit limit in order to get that utilization ratio changed.
Okay, I like that one because actually, right, so if you already have, let's just say it's $3,000 credit limit and you're maxed out at like $2,700, you're a couple hundred off the max.
Right.
If you call up the credit card company now, they're going to do an inquiry.
Right.
But within a couple weeks, they'll go ahead and give you that bump, and that might get you to a $9,000 or a $10,000. Now you're at that 30% utilization.
Correct. That's the other way that you can do it. For people who have little credit or marginal credit, opening up a secured credit card, and then just use it, and then it takes a couple 2-3 months before it kicks into the score. And that, of course, changes the credit mix as well. And the other way is to piggyback off of somebody else's credit by being an authorized user. So they add you to their card, and you get the benefit of their history. The only negative is if they are using a lot of their balances up too, then that affects you. So you want to make sure that the history is going to benefit you as far as getting a mortgage, if that's your immediate goal.
Yeah, I've seen that where the authorized user, it served its purpose, and then we look at the credit, and then we kind of do a quick scenario, and it looks like the authorized user is actually now hindering their credit. So
I've seen that.
Yeah, so it's an easy way to, if we're looking at it, so even if you're at that point where you're now getting pre-approved, we're going to also analyze that situation. So let's just say you got hooked up with Carolyn, your credit is A+ now, and then we're looking at on the mortgage side of things, we're also going to now identify some quick things to fix your credit, because I take a lot of pride in that. People aren't educated on credit. So if someone has a 680 and I can take 5 extra minutes and identify, maybe I can get them up to a 720 by doing something like that. At Capital Mortgage Funding, we are always trying to take people to the next level, whether it is affecting their mortgage approval or not. I just think credit is always something that needs to be talked about. And those little bit of details go a long way, because it's not just now, right? We're looking to raise our gaze, right? We want to help people, not just right in this moment, but 5 years from now. What does their credit situation look like?
That's why I go over everything with them when they sign up, because I want them to understand how credit works. Because I say to at the end, after we've cleaned up their credit, very affectionately, I never want to hear from you again.
Rates are, you have to understand something. In any credit that you apply for, whether it's a car loan, a boat loan, mortgage, your credit score is going to dictate your rate. Okay, you're going to go ahead and throw in a category. If you're 680, you're going to get a specific rate. If you're 720, if you're 740, 760 and above, you're going to get a specific rate. So it's very important that credit score comes out a lot higher, because you're going to get a lot lower rate. So remember this. Here's the equation. Higher the credit score, the lower the rate.
Right.
The lower the credit score, the higher the rate. So
and
it's
the
very
more
simple.
money's available to you.
Exactly.
Because
You might have to
less
put
debt.
down. That's right. You might have to put down less money. It just depends on your credit score. The credit score is the key. That's the first thing that we check as a lender. We pull your credit. We check your score, and then If we have to get Carolyn involved, we get her involved. But you can't go shop. You can't get Holly involved until we get you approved.
Yeah.
Or you can't.
Right.
It doesn't go Holly first, right? We want Holly to be first.
People think though.
I'm
But
so
we want Holly
patient
to be
waiting for
first.
you guys to all do your job. I
thank
just
you.
am waiting for the ball to get thrown to me.
But
Thank
most
you.
Got my
buyers
mitt.
think that you're first in line.
Yeah.
In reality, like
Yes.
any seasoned real estate agent, especially like yourself, like you know that immediately it is the lender that starts it all because we have to put together that picture for you to go find it.
Do you think
Right?
that
But
people,
people
are
just
still,
want the house, so they call
Right.
me because they
Yeah.
know I can get them in.
Yeah.
I've got the Vanna White opening the doors. The letters, they have to wait until I open the door.
And then the lender's like the crypt keeper, be like, hello.
Yeah, right.
And then the lender's like, close the door.
Yeah.
Becky's got the hammer. She's ready to roll on you.
We're not there yet.
I think that a lot of people are from before 2008. Like they think they can do the same type of loans and this and that. So
Yeah,
they're
it's
not really, they can have terrible credit and still get a mortgage. And it's not the same way anymore.
Financial prosperity isn't just a matter of luck here. This is
Right,
active, something
right.
that you're active.
Well, I tell people it's better to have good credit and not need it than to need it and not have it.
I love that.
Mm.
You have to be an active participant in your credit. You do.
All right,
Because if you
people's-
don't use it, you lose it.
No doubt. People's daily habits, though, and this is what we got to change: their attitudes, their influences, their choices that they make. Folks, grab a hold of your life. Look, I like the idea too, and I'm sure I had some old time relative that said, "Harvey, just pay cash if you don't have the cash for it." But the fact is, we're in 2023. The world's evolving. You need to have credit for everything. If you want to rent a car, if you want to take your kids to the amusement park down in Ohio, whatever, you need. If you're at Kalahari, you need a credit card to get the hotel. So there's lots of reasons why, and of course, now we even see it, Holly. Things are more expensive. Even car loans are more expensive
Oh, my
now, right?
gosh.
For all you agents out there, or you've been putting those miles on and you go back and you got to go purchase the car just to get the car loan. And that's where those Fed funds rates are really been most of hindering a lot of families is the cost of everything else has gone up. That car loan has gone up. And Harry, you mentioned it a couple shows ago that about 3 times the amount as that interest rate
As it is
has
now.
gone up through the roof. All right, long-term planning and goal setting, home ownership. Holly, let's get into a couple things out there. So you got these first-time home buyers ready to go. They're about 250 to maybe 265 if we stretch it out. They're a young couple. They want to get this house. Give me something. I mean, you're out there. Talk about these boxes and what the real feel is of the marketplace, especially if they've already got 1 or 2 offers that were not accepted.
So this is what I like to do. I like to sit down and have a strategy session because we need to set expectations. It's all about expectations. We want to win. If they truly can't go over 265, then we're not going to be looking at houses listing at 265 unless it's been on the market maybe 2 weeks, which is forever right now. And then maybe we can go in and say, hey, maybe they will take a lower offer or, but we don't want to set ourselves up for failure. If I look at that market and whatever city they're looking in and I can see where things are closing, I start at the end, right? So if it's closing, let's say it's listing at 250 and it's closing at 275. Well, now I know we've got about a $25,000, uptick. So we're going to probably look more in the 225 to 250 range because it's not fun to window shop. It's only fun when you're walking on vacation and you see the stuff and you're like, yeah, but when you want a house and you need a house, it's not fun to go in and get excited, bring the family, and then you go into a multiple offer situation and you're losing. And you shouldn't be losing so much. Your agent should be able to say, listen, we have to change our strategy. I'm willing to let people lose maybe one time just so they believe me. Because again, sometimes people don't know if you're telling them the truth. Once you lose at least one time, because I hate losing, I'm a really terrible loser. It's something I'm really bad at. And I don't want to get better at it, quite honestly. But I'll do it one time to say, okay, now you need to listen to me. I'm the one you hired. We need to set you up for some success.
Right. Holly, I do obviously a lot of work with mortgage companies and realtors, but a lot of them in Florida, they want that pre-approval letter before they get in the car with their,
Absolutely.
Yeah.
Absolutely. It doesn't make sense not to have it. And there's a couple of things. If I'm talking to someone and they just want to run and see a house, I'm like, but we can't put an offer in anyways for you. So why don't you be proactive and do the right thing? Get that piece of paper that says that we can put in an offer. Right. And quite honestly, when I list, I put right on there pre-approved buyers only. I do that to try to help agents who maybe aren't strong enough yet so they can say to their clients, listen, the seller says, you can't even come in without a pre-approval, and I have to follow what the seller says. So I
So
try to
Holly,
make it easy.
How
loving
often
all
do you
that.
call that lender? How often when you get that piece of paper, and maybe you don't recognize the lender, maybe you do, that's irrelevant. So everybody's got a piece of paper that says that they're pre-approved. How
Right.
often do you call that lender that's on that piece of paper?
So if I'm the listing agent and I'm
Yeah.
getting an offer,
Yeah.
every time.
Good.
So every single time. And I've got a long list of questions because, you get burnt one time with somebody who has a tax lien and they didn't mention that to you and you can't close because they thought it was going to get figured out sooner.
Yeah.
I ask lenders now, do they have any tax liens? Are there any? And they get offended. They're like, I can't even believe you'd ask. I wouldn't give
Yeah.
the letter. And I said, listen, I'm asking the questions that need to be asked because I want to close.
Right.
So you're going to tell me and I'm going to have to believe you. But, I'm really strong with them because I want to make sure they've done their due diligence.
Yeah, so everybody out there, there's certain things that as a lender that we can, if Holly asks certain questions, we might be able to answer them, but, dutifully, we can't, like respectfully and legally. We're not going to tell Holly absolutely everything. We're going to let her know that we checked the credit, we ran the financials, we have bank statements, and their credit's phenomenal.
All right, she opened up a can of worms, though. We talked about strong agents out there,
Love
right? Are you
worms.
strong enough to ask these people, are they truly approved? Do they have the money to close? Are you strong enough as a listing agent to say, hey, clean up that mess, get rid of that mold, and we'll get more money for your house and have an easier closing? All these questions and answers when we come back. 248-539-9797. Keep it here. Alrighty, welcome back to the Hardcore Mortgage Real Estate Business Show. We are taking your calls live here in our last segment, 248-539-9797. Carolyn Feldman with the credit piece of our show today. Thanks, Carolyn. You're doing awesome. And again, if you have credit questions, get in touch with us at Capital Mortgage Funding. We're going to work on that for you. She can do a soft pull on your credit report, so you don't have to get all crazy with me and, hey, Harvey, you're going to do a hard pull and this and that. Becky, we get those crazy calls.
Yeah.
The other
And
one you-
also, what's nice
Yeah.
about the reports that we get or that we get to view is that they also show how long somebody's credit's going to be damaged. We get the actual date.
So they can't just, hey, well, Harvey, I'm going to go pay that mess up that I created, and it's going to be fixed overnight. That's not the case.
Well, no, it's like, for instance, they put on the report how long it's going to stay on the report. and we get to see that.
All right. So tons of great information. Again, if you really have some credit issues or you want to move your credit score into the next set of scores, which get you a better interest rates, which help
Correct.
you in everything in life, definitely give us a call here. Holly, I was going to dive into a little bit of that, checking your credit and everything. We got to call Eric. Is that call up? Are we ready? No, not yet. All right. If you want to call the show, 248-539-9797, we definitely want to hear from you. Again, the Fed is going to be meeting next week. One of the things I want to throw in there real quickly, like it always comes up, Becky, is last weekend, of course, July 4th weekend, last Saturday, July 1st, sure enough, like miraculously, the summer tax bill here he showed up.
You love that.
And
Every
I
year
love that
you love
one.
that. He loves it.
Boy, they never miss. Like if you're looking for a piece of mail or trying to get that Amazon thing, that might come 2 or 3 days later.
I have a question to ask.
bill.
Maybe people out there, how come when we mail a letter, it takes a week to 10 days?
Right.
But every July 1st, or it's out there. It's crazy. December 1st, July 1st, however, the tax bills are at your mailbox the next day.
They're a little reminder if you have an escrow account. Of course, you can always double check with your lender before the due date, September 15th. Maybe it's August 31st. Make sure those summer taxes have been paid if you have an escrow account. If you don't have an escrow account, then of course you know when that bill is due and you know when you got to pay your property taxes. Becky, getting some cash out transactions. Taxes have gone up for some families. I'm looking at some cash out transactions to help some families. Now they're going to use the money to pay off their back taxes or their property taxes that are coming up, some bad credit card debt out there.
Yeah, I mean, you don't want to use your house as a piggy bank. We talk about that a lot, but everything is situational. It always makes sense for someone when it makes sense for you, right? Depending on what your goals are. Taxes, the escrows, I mean, I have a closing that's happening next week, and the summer tax bill came out, and it went up over $2,000 for the existing seller because people are paying more for houses. So now naturally the SEVs, the state equalized value, it's naturally it's evolving. It's increasing because now these sales are catching up. And so everyone's tax bill is going up, not just new buyers and all that stuff. So it definitely makes sense to refinance when it does. And obviously you start with that phone call, but we're going to go off to our call. We got, is it Hitchcock? Mr. Hitchcock? Who are you?
I don't know. Cheryl, I don't know. Someone's calling in here. All right, you're live on 97.1. Go ahead,
Hi,
Cheryl.
it's Cheryl.
Hey, Cheryl, what's up?
Hi, I just had a question. I was listening to your program and you were discussing mold. I didn't catch all of it. But in our particular situation, my mother is 92 and she's had her house since 1957. And we've been doing some improvements, but recently we noticed a stain on the ceiling that had been there for a while. We've had the roof repaired. They thought they fixed it. But in talking to someone who's going to do plaster repair, he's like, there could be a lot of mold up there, especially in the attic area and in through the ceiling. And you're going to have to demo that whole ceiling and get it out before you can consider selling it. Now, my brother, who's her power of attorney, is like, well, nobody's going to see it.
Wrong.
So,
Wrong answer
Wrong
there.
answer.
Yeah,
I don't see. Good.
Yeah, mold
That's what I
remediation
was
is
saying.
reasonable.
I was like, you can't just ignore that. Now,
Right.
we don't see any black mold on the ceiling, but that doesn't mean it's not up there, especially if it's been leaking for a while
Yeah.
Right. And
through an attic, down through the ceiling.
Yeah, so here's the thing. Unfortunately, there are people like you just described that they think, oh, well, out of sight, out of mind, you don't see it doesn't mean it's not there, right? It's just like even your, interest that you save, right? Just because you don't see it doesn't mean it's not there. If you were to stack up $100,000 and it's real money once you realize that, right? So just like what you're talking about is if you guys are aware of it and you're trying to sell that house, you would have to identify that on a seller disclosure because there clearly was some water stains
Absolutely.
and things like that. So, and mold remediation really isn't that expensive. And I'm going to kick it over to Holly on, what her take is if, let's just say she's going to be listing this house, what she would recommend. But definitely you want to make sure that you got to rest your head on your pillow at night. And it is going to come out in the wash. You can't hide stuff like that.
Cheryl, stay on the line with us here. We got Holly Amato on, of course, from eXp Realty. Holly does a lot of business. She's on the east side. She does all of Southeast Michigan.
she's glowing with
but
it.
even if Cheryl, if Ma lived in the house and she's gonna, she's not there anymore, and you're gonna sell the house, on the seller's disclosure, you actually don't have to fill it out. But the deal is, all the buyers that come by, they're gonna see this mess, and you're gonna lose money instead of taking advantage of this, and because your knowledge. Fix the problem. Tell us more, Holly. What should they do?
Yeah. So, Cheryl, honestly, mold, nothing scares people more than mold. And typically, if it's up in the attic or a situation because of a roof failing, it's a real simple fix with remediation. But you want to get that done before they see it because some people, even if they hear that it's there and it can be remediated, it turns them off completely. And you don't want to do that, even if they
Right.
didn't see it. And even if you didn't have to put it, because there's not technically a mold question on the seller's disclosure. However, when they do that inspection, which they're going to do, it's going to come out there. And then that kind of puts a little situation with your closing. It puts a situation with getting less than you could have gotten. I have a great person that does mold remediation in attics especially. So it will cost you less to fix it than it will if you let it go.
That's what I think too. My brother's kind of like different perspective. Thinks he's going to sell the house for top dollar, and it's like, no, we've been doing some improvements, but it's an older house, and now a lot of things are.
The truth
You know,
is,
this is just something that recently happened, and it's like they're all thinking we're going to make tons of money, and it's like, no, I don't think.
Well, you are going to make money on it. In fact,
right.
we're going to have Holly. Is it okay if we have Holly give you a call after the show and maybe just get over there and give her?
Yeah, that would be great.
Oh, great. I'm glad you called,
'Cause I
Cheryl.
need a realistic view on this whole thing instead of just what everybody's hearsay is about
Absolutely,
it. So that would be
Cheryl. I
really
love to do
helpful.
that. And especially in situations where there's family involved, sometimes it's great to just get a professional that's not, acquainted with any of you to come in with a fresh perspective and really show you what you can net on the sale of your home if you just follow a few prescribed, things that you
Yeah,
can do.
where the improvements would be
Exactly.
most beneficial,
Exactly.
as opposed to just picking things here and there. Yep, that
Right,
would
and
be
you're
really
in a great
helpful.
market because you don't have to do a ton right now. But yes, mold would be something you'd want to remediate. But there's the buyers are out and they're looking, inventory's low, so you're actually in a great situation.
Yeah, we're definitely going to give you a call after
Okay, good.
give you a call after the show, because the money that you spend now actually probably could equate to top dollar. It's just, you don't want to cut corners, take shortcuts, and we have the right people. That's why we talk so much about getting the proper real estate team in play. That's not just the real estate and the lender. It's also, who do you know to fix mold? Who do you know that can, inspectors, the grading, all these little itty bitty teeny tiny things. People say the devil's in the details, but the angels are really in the details, and knowing where to go, right? I know what I know and I know what I don't know, but what I don't know, I know exactly who to go to get my answer. And that is really the key of setting everyone up for success.
Absolutely. It's part of that team. You need to have team playing. If you need an attic remediation, if you need a plumber, if you need an electrician, we have that for you and we can help.
Yeah, so in
That was a great
Cheryl's
call.
situation, it's a great call because
real.
Cheryl and her brother are emotionally involved in that transaction because it's their mother, as they should be. They can't think crystal clear. So you have to have a third party that's thinking, that's not emotional, that is a professional, that's going to take a look at that project and say, here's what you need. And by far and away, you cannot hide it. You have to disclose it. And if you try to hide it and it comes up after the fact, you're looking at a lawsuit.
Exactly.
So what are you doing? What are you doing? It's seller's disclosure. You disclose everything. Better get it fixed so you can check the box that says no. All right? Because if you check a box that says no and it comes out later, you're opening yourself up. And you just
Also,
can't
by
do that.
what Holly
ignoring
said,
it, by ignoring it, you're also delaying what needs to be done in
Right.
order to sell the
And it could
house for
cost
top
more.
value.
It could
Correct.
cost more. The money you
Correct.
put in now could make you more money.
For
Yeah.
sure. And it's like, if it doesn't come out in the seller disclosure, if they waive the inspection, it's going to come out in the appraisal. If you can visibly see it, they're going to have to say it. And to Holly's point, you have to get it addressed, because that biggest thing that people are afraid of is mold. It sounds scary. It looks scary. People can have health issues because of it. And if it comes out later, it makes it look worse than what it is. And that's going to affect your top dollar no matter what.
Well,
Holly, not only that, people are emptying out their pockets to get that offer accepted. So they're already paying $10,000 or $15,000 over. They might not have 3 to 6 months in reserves like the olden days where families had a little bit more money in reserve. Now we're all chasing just to get the offer accepted.
Yes.
So you might not have that money. Now you're getting that buyer's remorse and the whole thing doesn't really feel so good anymore. So do the right thing again. And Cheryl, I like the fact that you'll reach out. And that's what all the top agents will do. They'll reach out to the sellers and they'll say, look, take the emotions out of this. This is why we do these things, to eventually get you more money for the house and less headaches. You don't want to start dealing with lawsuits and stuff like that and probate. And more importantly, someone buying something that's really unhealthy for them. And sometimes that's probably happened, obviously, in the last couple of years.
yeah. Exactly. Mold is one of the biggest scary factors of buying a house, and water. People are very concerned about water because, again, it does lead to mold, but foundational issues. We live in Michigan. So, I always say when we look in a basement, it's not if it's going to leak, it's when, because if a house as old as it gets, it's going to happen, but we're looking for a foundation. So yeah, you want to address these things, be proactive always, because you can get top dollar, but if you try to hide something, it's really you're in a transaction and everyone has to have some good faith. So when you mess with good faith, then people start to freak out and sometimes they'll walk away.
Yeah, and ultimately it'll come out anyway. So
yes,
you want to start off on the right foot rather than go backward because you concealed it.
Exactly. And nothing bothers me more than when the agents might be aware of something before the lender and then they want to clinch their pearls when the lender catches it. Like, what? What do you mean we have to fix it? It's so like, why do we have to be dramatic about it?
Right.
You clearly have concessions because you knew about it.
Wait, you didn't
So
see
let's-
that big puddle in the corner of the basement that's
like,
been
what do
sitting
you
there in the
mean
picture?
We have to have this fixed before close, right? And
Right.
we could do escrow holdbacks. There's a million things that we do because we're a progressive lender. We understand that every situation is different. However, stop acting dramatic about it. Let's just be professionals. Let's fix the things. But at the end of the day, there's clients in between all that. And it's best that, when we're the majority investor, we want to make sure that we're putting someone in a house that is going to be sound. It's going to help them raise their family. And they don't have to now empty their pockets even more to fix something that could have been addressed right from the get-go.
All we got to do is cross off the closing date on it and move it over. I got a feeling you're dealing with one of these right now, but that's okay. Yeah, it happens all the time. Holly, our homes are 50, 60, 70 years old across Southeast Michigan and across the United States. There's no doubt. We talked about it early. We talk about it often. Inspections are key. Knowing what you're buying, having the extra money to fix things. Money can fix a lot of things, but again, the health and safety things have to be addressed ahead of time.
Absolutely. And again, mold is tricky because with insurance, and I'm not an insurance professional, but they don't always cover certain things with mold. They get really wonky on that. So it's really important that you take care of it right away. Don't let it sit and fester because it could get worse and it could be on you.
All right, that music says it's the end of our show here. I can't even believe where it went. It's already July 7th. This year is passing. We're in the second half of home buying season here for 2023.
Summer's in full swing. It's not going to stop. Holly's going to tell us the market's still hot. You got to get your offers in, but you got to get approved first before taking Holly out on
Take care of
a
that
witch
credit.
hunt.
All
That's
right.
right.
Awesome.
That's
Hey,
right.
quick thank yous. Carolyn Feldman, Nationwide Credit Counseling. Thank you. If you want your credit fixed up, call us at Capital Mortgage Funding, 1-800-LOW-RATE. The best mortgage banker will get you hooked up with Carolyn. She does a soft pull, so it won't affect your credit score and will get you fixed up. The best real estate agent in the show today, Holly Amato, eXp Realty. Holly, thanks for joining us. You're great.
Thank you.
All righty. All the best people always here on the Hardcore Mortgage Show. For Harry Glanz and Becky Alley, I'm Harvey Free. We got Pat Caputo. He's coming up with sports. Keep it here.